Past performance may not be indicative of future results. Therefore, no current or prospective client should assume that the future performance of any specific investment strategy, including the investments and/or investment strategies recommended and/or purchased by advisor, or product made reference to directly or indirectly, will be profitable. Different types of investment involve varying degrees of risk, and there can be no assurance that any specific investment will either be suitable or profitable for a client's investment portfolio. No client or prospective client should assume that any information presented serves as the receipt of or substitute for personalized investment advice from the advisor or any other investment professional.
Welcome to the Bullington Capital Report, hosted by Bill Bullington. For the next hour, you'll receive information on current market conditions and trends that could affect your financial future. If you have a question, you can participate in today's program by calling 216-901-0945. That's 216-901-0WHK. You can also reach Bill by going to his website, bullingtoncapital.com. And now, here's Bill Bullington.
Welcome back, everybody. Yeah, been very interesting as normal. Been a lot of stuff going on. We'll talk about a lot of that today. I'm going to try to touch on some of the things that are going on with the real estate and how you give your kids real estate. We'll talk about that a little bit later. And a lot of people have questions. What's the best way to transfer this to my children and protect it? And there are a lot of issues involved there. There are a couple of there are 4 new tax deductions. We'll talk a little bit about those. I'm not a tax preparer. It's not what I do for a living, so I have to give you that disclaimer and tell you that anything you hear me talk about on this show, do not take as if it's gospel. Go and talk to your own tax preparer and or a tax professional. So I subscribe to an extremely high quality source of information, and it takes articles from all over the world, a lot of from all over the country, big financial publications, and so we like to think that everything there is completely inaccurate, but sometimes they make mistakes because they're people. So anyway. I thought I would start off 3 best ways to give your kids real estate, and then it goes on. I'm just going to basically just read from the article itself, and this was actually just produced on July 14th. So anyway, the key to owning property may no longer be related to income or credit, but having parents who can hand over a home the right way. The greatest financial handoff in history is underway, and monopoly-minded Americans have a rare opportunity. Experts estimate that U.S. families will pass on more than $105 trillion in assets over the next few decades, and the real estate game is an especially interesting one. For heirs staring down soaring costs, nearly 70% spike in the median home price since January 2019, hitting $422,800 in May of 2025. According to the National Association of Realtors, this gameplay could be a lifeline. Can you imagine that? That is mind-boggling that median home prices went up that much over that length of time. To go back to 2019, it was right around $250,000, and now it's over $400,000. Amazing. Anyway, to pass property between generations, parents face a tightrope walk, balancing complex inheritance laws with ever-shifting gifting limits. Poorly timed transfer or seemingly harmless deed change can snowball into a 5 or 6 figure tax bill, potentially unraveling your family's long-term financial strategy. And this is why we have estate planning attorneys and accountants that they work with. Anyway, advisors said there are 3 key ways to give your kids real estate, as well as 3 mistakes that could turn this wealth-building launchpad into a potential landmine. Consider cash. The easiest way for parents maybe to give their child the capital to make a home purchase on their own. So that's interesting. Send them money. Families that aren't able to fund an entire home purchase yet still want to pitch in some for the cost can transfer the funds. In fact, 27% of younger millennials receive down payment assistance in the form of a gift or a loan from a friend or relative in 2025, according to the NAR, National Association of Real Estate, I think, Realtors. You can give an individual up to $19,000 annually or $38,000 for spouses splitting a gift. The translation of that, the spouses splitting a gift, it basically just means if you're married, you and your spouse can give $19,000 a year away to a specific person. And when you add it together, it's $38,000. And you don't need to report it to the Internal Revenue Service. Any more than that, you're supposed to keep track of it because you have an estate limit of how much money you can pass on without estate taxes federally, up to $13.99 million, roughly $14 million as of 2025. At the state level, Connecticut is the only state with a gift tax, and 12 states plus the District of Columbia have an estate tax, according to the Tax Foundation. People often worry that if they go over the annual federal limit, it immediately triggers tax penalties, which isn't the case. For example, let's say you want to give your daughters $100,000 towards a down payment in cash. Because that amount is over the annual $19,000 limit, you would be required to report the gift to the IRS. The money would be deducted from your $13.99 million lifetime gift limit, or $27.98 million for married couples, including estate taxes, meaning that you would still have $13.89 million to give before taxes actually kick in. That's why most people don't really have to worry about that. And some do, but anyway, shifting estate tax and gift tax limits, the amount you can give without tax penalties has been increasing. In 2025, it's $19,000. Last year, it was $18,000. I remember when it was $6,000. That's a little spooky. That was a long time ago. Anyway, with cash in hand, their child can then purchase the real estate. If they apply for a mortgage, you'll need to submit what's called a gift letter addressed to the provider explaining the money doesn't require a repayment. Your mortgage lender should know all about that and be able to walk you through those steps. Make a loan document. If you want your child to learn how to manage debt while retaining a legal claim on the funds, Jennifer Galvania of Bank America Private Bank recommends making an intra-family loan. These types of agreements can offer lower rates than you would get at a bank and have the added benefit of allowing parents to forgive loan payments annually up to the gift tax exclusion limit, effectively turning portions of the loan into tax-free gifts over time. That's actually a pretty good idea. The IRS requires intrafamily loans to have a written agreement that establishes a formal relationship between the lender and the borrower, normally a parent and their child, and outlines the terms of the loan, including the interest and a plan for repayment. While you can technically draft the loan document yourself, mistakes could be costly. Yes, this is where you want to get an attorney involved. So it's a better idea to work with a tax expert or an estate planner to draft the promissory note. Keep in mind that while these rates can be lower, the minimum interest charged must be in line with the applicable federal rate at the time the loan was closed, or else the overage will count toward your annual gift limit. In other words, if you don't charge enough interest, you can still give it to them, but the difference between the interest that you should be charging and the interest that you charged will actually come off of the tax benefits or the amount that they can pass on tax-free whenever you pass away. Anyway, to place a property in a trust, any family that hopes to pass along wealth to the next generation should consider a trust. And that was according to Jeremiah Barlow, the head of Wealth Solutions at Mercer Advisors. These arrangements aren't strictly for the moneyed class, and families are increasingly use the estate planning tool to buy real estate if you have enough money to cover the full purchase price. A trust can reduce estate taxes, avoid gift tax issues and offer more protection and flexibility. There are two types of trusts, revocable and irrevocable. The type you choose will be based on the value of the assets you plan to transfer and when you'd like your children to benefit from them, said Courtney Fell, the Executive Director of Wealth and Estate Planning at Morgan Stanley Private Wealth Management. The cost to set up the trust document will depend on the complexity of your estate, but can range from a couple $1,000s up to $100,000 to hire an estate attorney and a financial advisor. Yeah, if you're worth a lot, and the more that you're transferring, the higher the fees are because the risk is a lot higher if you make a mistake. Anyway, go with a revocable trust if you want something akin to a will. Put simply, revocable trusts are best for those with smaller estates whose goal is to pass on property after their death. The advantage of a revocable trust over a will is the transfer can be administered outside of backlog public probate courts. I don't know if any of you have ever had to try to get an estate through probate. It's a long, arduous process. Much simpler if you have trusts. Anyway, if you can get it administered outside of those public probate courts, it'll allow for a much smoother and discreet handover to your beneficiaries. See, that was cited by Karen Young, an estate and gift tax attorney for Withers Worldwide. These types of trusts can be easily amended or revoked during your lifetime. See, that's the thing I really like about that particular trust is you can change it. So as long as you are mentally sound, you can make changes to it as often or as infrequently as you want. The article goes on saying, since revocable trusts transfer assets upon death, those assets will be subject to an estate tax if the value exceeds the current limit of $13.99 million. Choose an irrevocable trust if you have a complex fortune. An irrevocable trust is best for high net worth families with complicated portfolios. In addition to privacy and ease of transfer, an irrevocable trust has the added benefits of asset protection from divorce or creditors. It allows your beneficiary to reap the benefits of the property during your lifetime, meaning you can allow your child to live in the home. This option removes the real estate from the assets you plan to transfer to loved ones upon your death, lowering future estate taxes. Irrevocable trusts are still subject to gift taxes, which sounds annoying since gift and estate taxes both pull from the same $13.99 million pot before the tax penalties take hold. However, because the property will likely increase in value over time, placing real estate in an irrevocable trust essentially freezes the cost of what you're passing on to your beneficiaries at its current value. Let me say that in English. Let's say you wanted to transfer your house over to a trust to go to your kids with minimal friction from local governments and federal governments too. So you set it up. You put it in there. It's worth $5 million. By the time you pass away, it's worth $10 million. Well, that $5 million in appreciation is actually not going to be taxed because it was based on the value at the time you made the gift. That's a big deal. That's a really big deal. And it doesn't have to be in the millions. I mean, if you're going from $500,000 to $1 million, that's a lot. So anyway, you can also set up an LLC and manage it. High net worth individuals have long used limited liability companies or LLCs for tax advantages and strategic asset management. Yet legislative crackdowns in states preferred by millionaires and billionaires, including New York and California, mean LLCs won't offer the level of privacy they used to once those laws take effect. And see, a lot of that stuff, they didn't even have to publish a lot of the stuff that was going on inside of the LLCs. But now they're going to change that up a little bit. It looks like it, but it could change before that happens anyway. LLCs are still useful and a good choice for families with a business or income-generating asset, such as rental property. Forming an LLC is straightforward. Come up with a unique name, register it with the state of your choice, create an operating agreement, and obtain an employer identification number or EIN. And you can transfer the property ownership to the LLC, or the entity could purchase the property to have all the requisite funds. This is where a good attorney comes back in. All the stuff that I just read, your head's probably spinning from all that, so is mine. But this is where good estate planning attorneys can really earn the money that they're paying. And if you're, I don't know what, there is no basic standard for what the costs are, and I just have been informed I have to take a real quick commercial break. So this is Bill Bullington. I'm right here on 1420 every Saturday from 11 to noon. I will be back right after these commercial messages.
Make it count, leave a mark, build a name for yourself. Dream your dreams, chase your heart above all else. Make a name the world remembers.
For a long time, we worked right out of our garage, like a tech startup, except for plumbing. Luke, me, my dad, plus Jamal. And a great thing about that is we were just off the kitchen, and Mom was there, making sure we always had fresh coffee, sodas, and snacks. Plus, we'd full-on feast on breakfast, with everybody a few times a month. And nothing beats sitting down together over a home-cooked meal.
Especially with your mom's blueberry oatmeal pancakes.
Jamal's right, those are my favorite.
Forget plumbing, you'd make a fortune just selling those.
So when we moved into our current building, we recreated Mom's kitchen between the offices and the warehouse. And Mom's still there sometimes on Tuesdays, cooking breakfast, including her famous pancakes for the whole company. So ladies, if your husband's a plumber who isn't happy or appreciated at work, and if he's the right kind of plumber, call about joining us for breakfast.
If you're on the team, you're family, and you'll see it for yourself over breakfast.
Consider it done at WyattWorks.com.
No doubt about it, we're spending more time at home, which is the perfect time to make it more functional and beautiful. Hi, Ed Flash Ferentz here for Artistic Renovations, Northeast Ohio's premier and award-winning remodeler. Artistic did a fantastic job with our kitchen in 2016, and last year, they were back for the master bath. Oh, my word. Do yourself a favor and go to artisticreno.com. Believe me, you'll love their ideas and without question the finished product. For a virtual consultation, call 216-520-0838 or visit artisticreno.com.
You've heard the saying, all good things come to an end. Well, not always. Sometimes they just take a break. That's what's happening with Our Lady of the Wayside's car donation program. After 24 years and 96,000 rides donated. Pretty amazing. Here's the story. The car lot's owners sold the property, making it impossible for car donations to be accepted at this time. According to the Wayside CEO, Terry Davis, the next right steps will be determined and communicated soon, so stay tuned. In the meantime, Terry and the entire team at the Wayside thank you for your continued support of the 450 individuals with developmental disabilities in the Wayside's care. And please take note, you can still support them by making a donation at thewayside.org. Thinking about updating your home? Well, Joyce Factory Direct specializes in replacing old, outdated windows. Proudly made right here in Cleveland, Joyce Windows features their exclusive Smart Shield high-performance glass, which means you'll be getting the most energy-efficient windows for your home directly from the factory. Customers just love how much warmer their house is and how easy their new windows operate and clean. Right now, you can save 50% on all installations. Just call to schedule a free consultation with on-the-spot pricing, 440-243-5700, or visit joycefactorydirect.com.
Well, welcome back. This is Bill Bullington. I'm here every Saturday morning from 11 to noon. If you'd like to learn more about my company or set an appointment to talk about your own financial situation, you can go to bullingtoncapital.com. That is bullingtoncapital.com. And just click on the contact us, and it's got all of our contact information there. So, I was looking at, I obviously I look at thousands of articles over a week. I don't read all of them. I just kind of scan and see which ones I think might have most interest, and also send out a free newsletter. So if you wanted to go to my website and sign up for the newsletter, that's where this material comes from. And I'll start sending it out to you. And we just get you on the mailing list. And by the way, I'm not going to call you to try to track you down if you decide to do that. We have a tough time keeping up with the people that want to speak to us, and if you're not in that, if you don't want us to call you, then we just don't. That's the bottom line. Anyway, the global risks with the loss of an independent Fed. This is something that's been new. Current administration thinks that they can do a better job running the Fed than the Fed, the officers in the Fed are running it now. I don't agree at all. And we've had tons of presidents that tried to control money supply. I always thought that the president of the Fed, the Federal Reserve, was the most powerful man in the world because our economy, one of the top economies in the world, is responsible for a huge percentage of the output and the consumption. And so the person that really is controlling the speed, oftentimes, is the president of the Fed. And it's something where you have to have a lot of practice, a lot of experience, a lot of patience, and just the experience level alone would be incredibly difficult to achieve. That's why those guys have a tendency to be a little older when they get appointed there, as it takes a long time to gather that experience. And we've been very blessed in this country to have such good shepherds in the past. The Fed presidents here have been rock stars. They have done an amazing job, and they don't get much credit for it, and which is really funny because without them, man, we could be a third world country. And they did such a good job. You get one of the, if not the largest economy. I can't remember if China has surpassed this yet. But to be as small of a percentage of the total population and put out so much volume, and our GDP is so large relative to the population when you start comparing it to all the other countries around the world, it's mind-boggling. I mean, it's absolutely mind-boggling. So somebody tells you, starts talking about America, not how bad things are here, they just don't really know. I mean, there's always going to be bad things happening. I don't care where you are, who you are. But it's also been proven over the years that the better economy does, lower crime rates are a result of that. And that's, bottom line, people have higher living standards. You have just an enormous number of positives that come from having a strong economy, which is basically financed by the banking system. And the Federal Reserve is the kind of the, I don't know what I would call it. I guess they do police banks. They do regular audits to make sure that they're following the rules. Because if you don't follow the rules, it's going to be a catastrophe. And I just think we've been very lucky to be born in this country with that. And that is really one of the top reasons that we're one of the top countries in the entire world. And I know a lot of people want to argue with that. That's fine. Everybody's entitled to their opinion as far as I'm concerned. But I'm just thankful that people that got together earlier on when they started rolling out the rules and laws and then put the Federal Reserve System in place, those guys were incredibly intelligent. I mean, they didn't have computers. They didn't have the internet. Heck, the printing presses were a new technology at that point. So it was very, very ahead of their time, I guess I should say. And like I said, I really believe that we've been blessed with the number of people that have held that office. It's not talked about a lot. That's actually a very good thing, because every time, it's like anything else in life, everybody has their own opinions, and this one's been left alone. The general public doesn't get taught a whole lot about how the underlying banking system all works, and that's the foundation. That is the foundation of the economy. That's why I have confidence, and sometimes I get people that respond to my radio show saying, "You're always talking about everything's going to be fine. It's great. It's good." And I'm like, Well, yeah, you're going to have bumps. And I've never said it's going to be smooth. I just said if you keep going, it's going to improve, and that's the bottom line. And are there setbacks? Yeah, there are setbacks. They're going to happen from time to time. A lot of them you can't even control. So, but with the right, I'm telling you, with the right financial system in place, the financial problems end up helping tremendously to solve all the physical problems or any other type of problems that you have. If you have the money to deal with it, deal with problems that come up. I mean, look at the thing from California. That is mind-boggling how much damage was done there, and now you're not really hearing a lot about it because they're busy working and rebuilding that. You don't think that money that's being spent there is actually going to help, and it's horrific that it came at the hands of such a big catastrophe. That I wish it was done another way. But the bottom line is, it will get fixed. It'll be repaired. It's going to get a lot of them will be better than they were before, and it's all going to be paid for by the system with the Federal Reserve Bank as the backbone of all that system. Now, the insurance companies are taking care of that particular instance, but they park their money in the Federal Reserve to get interest on the money that they're holding before they have to pay out claims. And everything is interconnected. It's like a big game, and a whole lot more complicated than Monopoly is. That's really funny. I bet most young kids have never even played Monopoly. Yeah, not once in their lifetime. So anyway, I should probably stop using those old words and giving away my age. But anyway, Trump denied planning to fire Powell. By the way, that line just stuck out at me, and I'm like, he thinks it's highly unlikely, and that's a good call. That's my personal opinion. I keep up with a lot of the my major was economics, so from over the last 30 years, it's been fascinating to watch what goes on there, and I think they've proved without a doubt that their our economic policies, have been some of the best in the world. And it's mainly because they don't try to predict what's going to happen in the future. I mean, they do make forecasts. They have to. The public won't let them in the office if they didn't. But they always have the ability to adjust, and that is the key. That's the key. You don't keep doing something if it's not working. You don't keep doing something if it's actually doing damage. You take a look at what's happening, form another idea, and try that one. And that's basically what they've done. And with lending, we've had so much experience doing this now, and the banks are so strong. Other banks around the world have copied ours. We copied this system, by the way, from really old, I think it was 14th century or 15th century, somewhere in that neighborhood in Germany. And they took that banking system and exported it to England. England started using it, and then when they came to found America, one of the first things we did was try to set up a Federal Reserve and a banking system. Prior to the Federal Reserve getting much power, by the way, banks, there was this phrase called a run on a bank. Most young people have never heard that term. It's because their parents or grandparents weren't alive during the Depression. And a run on a bank is a bank is actually going broke because the people that they made loans to have gone broke and couldn't pay back their loans. You don't hear a whole lot of stuff about that. Occasionally some of that stuff happens, but I think people are so separated from all those activities in their daily lives and so distracted by everything else that's going on that they really don't pay a lot of attention to it. And you know what? That's actually probably a really good thing. If they were paying closer attention to it, they'd actually be a little bit more upset. And I think that would have the impact of slowing their spending down, which slows the GDP growth. Gross domestic product is basically the value of what all the production in the country. It's a lot more sophisticated than that, but basically how much business is the company doing, a country doing, and that can slow down based on what the perception of the future is going to be. And by the way, the problem with using something like that is getting an accurate picture of what the population thinks or the direction the population thinks we're headed in. Can you imagine asking 330 million people, hey, where do you think the economy is going? By the time you got that information all collected, it will have changed. I promise you. So there's no perfect way, but we do have things like Walmart has computerized cashiers in checkout places. It's much, much, much easier to see. And Walmart's a publicly traded company, so they have to publish all their stuff, and you can see how they're doing. And they make such they're such a big company, and they carry so many products from other industries that it can give you some insight as to how good or bad current spending is. And again, that can change on a dime. So anything can change, and actually it always does. Nothing ever stays the same for very long. It used to stay the same a lot longer before the internet. And the internet, it's not just the internet. It's not just people getting on the internet. It's businesses. Much that has sped up their ability. They're using a lot of the internet for their personal computer systems, which are huge, some of them. So it's just the development of the internal workings of the economy to get money to flow. I need to pay this bill. I need to make another purchase. And that being able to do all those transactions, it is mind-boggling, just mind-boggling. And it's interesting to be around to watch all this stuff and the transition. And when are there mistakes made? Yeah, there are mistakes made. Is there going to be a mistake made that ends the entire world? I doubt it. I just doubt it. There are too many fail-safes. There are too many people working in those industries. And we've had a lot of experience getting out of every mishap that's come along over the past couple hundred years or so. So experience is a great teacher. I always said that I thought it was one of the best teachers, especially if it was somebody else's experience that I could learn from instead of having to experience it myself. That's kind of a big deal. But sometimes that's not always possible. And, oh, by the way, some people never learn. They just don't give up on an idea that doesn't work no matter how many times. So anyway, I mean, we're in a pretty good place here. And let's see, I was reading about Trump, and he's calmed down a little bit about trying to get rid of Powell. He doesn't realize that the president can't do that by himself. He's got to go before Congress, and it takes a lot to move anybody out of one of those positions. That's why they deliberate so long when they're selecting someone. If they get somebody in one of those offices, in that office in particular, and it's not good, it's very difficult. It's time consuming to try to get them back out again. So anyway, I was taking a look at. I don't like to talk a whole lot about taxes, mainly because I go to my tax preparers and I give them all my stuff, and I have big faith and trust them, and so I haven't had to learn as much as I would probably like to be able to learn. There are a lot of things I haven't learned that I would like to know, but outside of the basics, the basics are very helpful for individual financial planning. When you get into corporate, there's this, it's mind-boggling. The Internal Revenue Code, I forgot how many thousands of pages it is now, but it's a lot. So anyway, some of the changes that were coming down, this is going to be for the tax years 2025 to 2028. Allows workers who typically receive tips, such as waiters, bartenders, hairstylists, to deduct qualified tips from their taxes. And Employees and most self-employed individuals qualify if they're in occupations that have been customarily and regularly received tips. Yes, and that was on or before December 31st of 2024. The IRS is going to publish a list of qualifying occupations by October 2nd of this year, 2025. IRS defines qualified tips as voluntary cash or tips charged to customers or money earned through a tip sharing program. A lot of restaurants have those. I'm sure probably a lot of hair salons will have that too, but who knows? Anyway, employees can deduct up to $25,000 of their tips annually, while self-employed individuals can deduct up to near their yearly net income. Wow, that's a lot. That is a lot. That's going to help the restaurant business out big time when they tell the wait staff that they don't have to claim tips or don't have to pay taxes on them. Anyway, I've only got a few seconds before I got to take a real quick commercial break. This is Bill Bullington. I'm right here on 1420. Stay tuned because I'll be right back.
All right, hey friends, Bob France here for the good folks at the Buff, Harry Buffalo, Great Northern Boulevard in North Olmsted. When's the last time you stopped in Harry Buffalo? If it's been a little while, you don't know what you have been missing. They have added so many phenomenal things, including the new lunch special, Monday through Friday, 11 a.m. to 2. You get your choice, 2 soups, salads, and sandwiches. You pick all, just $10. Now, that's the lunch special. They also have the happy hour specials, and that's my favorite. Weekdays from 4 to 7, a new food special every day of the week, wing day, burger day, pizza day, all kinds of great options for you. You can check them out online at harrybuffalo.com. As a matter of fact, while you're there, join the herd, get a free appetizer on your next visit. Take a look at the menu, whet your appetite just a little bit, and head on out. By the way, if you're looking for something after work, great drink specials and happy hour too. $3 for craft pints, domestic talls, well drinks, and house wines. $3 domestic pints all day. So whether it's lunchtime or happy hour time or dinner time, doesn't matter. It's a great time when it's Harry Buffalo time on Great Northern Boulevard in North Olmsted.
Watch good, clean comedy videos from today's most popular comedians anytime you want at GodTube.com. Your place for family entertainment and laughs. It's the all-new GodTube.com.
Bob France here. Improve the comfort and value of your home with new windows from Empire Window Company. Call 855-76-EMPIRE or log on to EmpireWindowCompany.com.
Do you ever find yourself saying, I need a vacation? Vacation Fixation can help. At Vacation Fixation, we specialize in all-inclusive trips and cruises to Mexico, the Caribbean, and Disney vacations. Why choose us? Our clients book through Vacation Fixation because they are frustrated with online trip brokers and timeshare scams. Whether it's a weekend getaway, a family trip, spring break, or honeymoon, Vacation Fixation will personalize a trip just for you. Want to know the hottest destinations in Cancun, Punta Cana, Jamaica, or Puerto Vallarta? Interested in room upgrades, beach reviews, or details about resort restaurants? How about finding a trip with a direct flight? At Vacation Fixation, we take all of your specific travel requests and shop our suppliers to find the best deal. What's the cost? Our suppliers pay us so you don't have to. Call 330-573-8147 for more details. Or you can visit our website at vacationfixation.com or check out the deal of the day on Facebook. Vacation Fixation.
Is it finally time to update your bathroom? Bath Planet, a division of Joyce Factory Direct, specializes in replacing and converting old showers and tubs into new, beautiful bathrooms in as little as one day. We have transformed thousands of bathrooms just like yours into a spa-like oasis that has homeowners excited to use their new bathtub or shower. Right now, all bath installations are 50% off. So call to schedule a free consultation with on-the-spot pricing. 440-243-5700 or visit JoyceFactoryDirect.com.
Well, welcome back. This is Bill Bullington. I'm here every Saturday morning from 11 to noon. If you hear anything you'd like more information on, or if you'd just like to set up an appointment to discuss your personal financial situation, you can just go to my website. It's bullingtoncapital.com, or you can call us 330-664-0700, or you can email me at bill@bullingtoncapital.com. and be glad to speak with you. This is my normal tone of voice, by the way. So if you don't like it, don't call. I'm just kidding. But I don't. My point is that I just don't pressure anybody. Life is hard enough. My goal is to try to listen to what your goals are and try to help you the best I can to get you where you need to go. We have managed money programs. I just started picking up on some of these recently, just within the last probably 9 weeks, and I like them. I went first. I always go first. I went a few months ago, tried it out, and seems to work really well. The bigger firms that I'm using, they have hundreds and hundreds of different types of portfolios, and that is a lot. I mean, there are thousands of stocks, there are thousands of ETFs, and so when you put them together, you can create millions of combinations. So it can get confusing, and I'm very glad I do this for a living, because I would hate to have to try to do this and live a normal life. But anyway, this one article is titled "The Global Risks That Come with the Loss of an Independent Fed." And this has always been very interesting for me, because the Fed really has been the reason. Most people, they don't get anywhere near the credit they should be getting. The reason that the United States is one of the main reasons that it's such a good place to live is that we've got a great banking system. So you can come over to this country from a foreign country, which used to be very popular. Now it seems like they're trying to make them leave, but you can come here and you can work and you can go to a bank and you can get a loan for a house or a car. And it's not that hard. It's not nearly as difficult as it is in a lot of other countries. So, and a lot of them have caught up, well, a lot, but we're still one of the top in the world. And we've got the opportunity there to continue this growth. And it's going to happen, by the way, because I didn't talk about the other industries that are coming online that are actually increasing the demand for kids going to college or kids going to tech schools to get trained. That all creates money. Everybody that works at the schools, lives in housing. They buy clothing. They eat food, so they contribute to the economy. And it's a really good thing. Anyway, the article, "The Global Risks That Come with the Loss of an Independent Fed." And then that's one of the reasons we've done so well. The Federal Reserve has not been controlled by the government. I mean, can you imagine some of the presidents that we've had in this country over the past couple hundred years controlling the money? A lot of people think they do, but they don't. They have to convince Congress to take action. They can try to put in, I'm just going to give mandates, but those, still have to be approved by Congress, and the vast majority of them, at least, they haven't been approved up to this point, which is a good thing. You really have to think a lot of this stuff through, and without a really good background in banking and economics, I mean, you're not going to be making the best decisions because you don't have enough information or experience. And so I'm kind of glad things are the way they are. And if Wall Street Journal was writing this article on what would happen if we ended up losing that, what if that goes away? And the article starts by saying President Trump's threat to attempt to fire Federal Reserve Chairman Jerome Powell has raised a pressing but potentially unanswerable question. What would the global economy and financial markets look like without an independent U.S. central bank? Shielded from White House interference, the independent Fed has increasingly served as an anchor for U.S. and global markets, stepping in to steady the ship during the 2008 through 2009 financial crisis, the COVID pandemic, and other shocks of recent years. Economists credit the central bank's ability to keep things stable in large part to its power to make moves it deems necessary regardless of politics. And that's one of those things where sometimes it's the antidote is the opposite of what you might think it is. So without the experience and to know how to get that done, it could be trouble. And we've got a couple hundred years of experience there, and our system's set so that it's not run by one person. It's run by there's a head of the Fed, but he's got to get a vote from all the district head of the district Fed to be able to get everything done. There's got to be a majority there. So anyway, now former Fed officials and investors warn that a central bank more beholden to the White House could lose its ability to act quickly and credibly in the face of financial threats. In other words, you've got to go through the White House. It's going to slow you down, and that's going to hurt you. Now, on Tuesday, Trump suggested in a White House meeting with Republican lawmakers that he could soon try to oust Powell, escalating months' worth of criticism that the central bank has kept interest rates too high for too long. The president later said it was unlikely that he would fire Powell, so he kind of backed off a little bit. Politicians almost always think interest rates should be lower than they are, said Alan Blinder, a Princeton University economist and former Fed vice chair. This is the major reason we need an independent central bank. The possibility that the firewall could crumble holds the potential to reverberate across markets at an unpredictable moment for the economy. The U.S. is still shaking off years of inflation above the Fed's longstanding 2% target, with the recent data showing that price pressures from Trump's trade wars are beginning to mount. Central bankers and investors the world over are waiting on the Fed's next move. Economists fear that an unprecedented shakeup at the center of it could add to the uncertainty and undermine the Fed's credibility when the next crisis explodes. That could matter not just for the United States economy, but other economies too. When markets around the world have spiraled lower in the past, such as during the 1998 Russian debt crisis, the Fed has stepped in to shore them up. The Fed's ability to do so relies in part on its capacity to keep credit flowing when markets are freezing up, according to Harvard University economist Jeremy Stein. That requires that thousands of Fed employees are able to quickly step into the breach. He worries that threats to the Fed's independence will over time erode the talent and depth of experience at the Fed staff. That, and of course, the quality of leadership can potentially make a huge difference in the crisis, said Stein, a governor at the central bank from 2012 to 2014. The Fed has frequently participated in international financial rescues, such as of Mexico in 1982 and again in 1995, often to prevent a chain of reaction of panic from destabilizing the global financial system. It maintains swap lines under which it lends dollars to foreign central banks, who then lend the dollars to their own banks when they are under stress. The Fed worked with global central banks and finance ministers in the financial crisis to stop big financial firms from failing. The Fed typically worked with the administration of the day of these rescues. It's unclear if a Fed more directly controlled by Trump would participate as readily in such efforts or attach different conditions related to Trump's other priorities. The tension flaring now during a period of relative calm revolves around the core of Trump's agenda, tariffs, and the extent to which they could spur knock-on inflation interest. Yeah, I think they meant knock out inflation in earnest. That little typo there with the publication. Anyway, Trump's pressure campaign for rate cuts has played out in the public in recent months, with the president at times mocking Powell as Mr. Too Late. After federal data Tuesday suggested inflation accelerated modestly in June, due in part to tariff impacts, Trump said the central bank should slash its roughly 4.3 federal funds rate by 3 percentage points. Wow. You say that to any economist, and they don't know whether to laugh or cry, said Blinder, who served at the central bank from 1994 to 1996. Low interest rates encourage businesses and consumers to borrow and invest more, which can boost economic growth. They also risk pushing inflation substantially higher. That's what happened in the 70s. I don't know if you guys many of you are old enough to remember that. If you're unwilling to raise interest rates to fight inflation, inflation is going to win, lender said. So low rates can also inflate financial markets. Investors unable to generate strong returns in safe assets, such as short-term treasury notes, will move into progressively higher risk assets where returns are higher, but so is the danger of steep losses. So basically what he's saying is that could cause people to sell their low-yielding short-term bond and put it in the stock market thinking, well, at least I have a chance of making some money there. And then those people haven't lived through the 250% declines that we've seen in the past 20 years. That would be a mess. Anyway, another worry is that when the Fed does step in to help markets, it only emboldens investors to take even more risk later on the assumption the central bank will bail them out if trouble hits. That's, by the way, all this stuff, now you're starting to see why I started talking a couple of years ago, around 3 or 4 years ago now, about annuities. Because seeing where we are, looking at where we are, what the potential outcomes could be, not that they will, but if they could, they make a ton of sense. You're going to get rates that are 50% higher than what you'll get in a CD. You can lock those rates in. This is one area where the older you are, it benefits you more because they will guarantee to pay you more. With an annuity, as you age, your life expectancy is coming down, so they can afford to pay you more. And I'm running out of time here, and I feel bad that I waited this long to talk about this. But if you'd like to get some quotes and find out what you might be able to get on a fixed income investment, just feel free to go to my website, bullingtoncapital.com. Reach out there. I'll reach back out to you. Or you can call us at 330-664-0700. I think I'm just out of time, so this is Bill Bullington. I'm here every morning from 11 to noon on Saturday. And I hope you guys all have a good week and good luck. Thank you.
You just caught another edition of the Bullington Capital Report, broadcasting every Saturday at 11 a.m. on AM 1420, The Answer. If you have a question and you'd like to speak to Bill personally, you can call him at 330-664-0700. That's 330-664-0700. Or online at bullingtoncapital.com. That's bullingtoncapital.com.
The preceding program has been paid for by Bullington Capital Management, LLC.